Welcome back, everyone. We've got a truly fascinating story lined up for today's explainer. We're looking at Samsung Electronics in the summer of 2026. Right now, this massive tech titan is standing at a completely disruptive crossroads. We're talking about a moment defined by historic, dizzying highs on one hand and some shocking, unprecedented lows on the other. It's honestly the most disruptive technological shift since the internet itself, and Samsung is right smack in the middle of it. So let's just dive right into this, because Samsung is currently living out the ultimate irony. Think about this. On one side of the house, they just posted the most profitable quarter in their entire 58-year history. We're talking a staggering $62 billion in operating profit, all driven by this insatiable global appetite for AI. But at the exact same time, their famous smartphone business, the division that literally put Samsung on the map for most of us, just reported its first ever quarterly loss. It's wild. They're making more money than ever before, but their flagship product line is bleeding cash.
To untangle this mystery, here's our roadmap for today. We'll start with the AI profit engine, then look at the mobile margin squeeze, check out their big bet on foldables, dig into the shareholder showdown, and finally, forecast their AI future. Let's get to it. Section 1. The AI profit engine. Let's look at how they completely shattered every record in the books.
1,814%. Let that sink in for a second. That is the year-over-year increase in Samsung's operating profit, hitting 89.5 trillion won. That's roughly $62 billion. That is nearly a 19-fold jump from last year. To put that completely astronomical figure into perspective for you, Samsung's operating profit for just one single quarter is now larger than the annual GDP of many small countries. Absolutely incredible. And looking at the top line, total revenue reached an eye-watering 171.5 trillion won, which is about $121.2 billion, a 130% increase year over year. So what's driving all this cash? Well, it is entirely powered by their device solutions division, specifically memory chips. The memory business alone pulled in 127.5 trillion won in revenue and 89.2 trillion in profit. They went all in on AI server demand, massively ramping up production of their 6th-generation high-bandwidth memory, HBM4. Actually, they're projecting HBM4 is going to make up over 60% of their HBM revenue in the second half of 2026 alone. And the craziest part? They aren't stopping there. In early August, Samsung unveiled zHBM. This is a next-generation 3D memory architecture that literally stacks memory vertically, right on top of AI chips. The performance metrics on this are just wild. It boosts GPU performance by up to 8 times and hits more than 10 times the memory density of HBM5. They are continuously pushing the boundaries of physics to keep up with AI. This relentless innovation is paying off with some massive long-term deals, too. Samsung just locked in a strategic partnership with U.S. chip designer Broadcom that's valued at over $200 billion through 2030. Samsung is going to supply next-gen HBM like HBM4 and HBM4E, and they'll actually manufacture Broadcom's AI processors using highly advanced sub-2 nanometer foundry processes. Huge win for them. All right, moving on to Section 2, the mobile margin squeeze. This is where things get a bit dark. Because here is the multi-million-dollar question, right? How exactly do you lose $476 million, or 700 billion won, when you are successfully selling millions of highly popular smartphones? Their MX division, the one making the phones and watches, recorded 33.2 trillion won in revenue. The Galaxy S26 series actually did really well, growing 13.7% year over year. But despite all that, they still posted their first operating loss since the MX division was even created in 2021. So what happened? Well, it's this brutal, ironic cycle. Think about how this plays out. Step 1, the AI boom spikes global server demand. Step 2, because of all that demand, the prices for DRAM and NAND flash memory go absolutely through the roof, which leads to Step 3, mobile memory procurement costs skyrocket, totally wiping out hardware margins for smartphones. The ultimate irony here is that Samsung's own wildly successful chip division is essentially driving up the component costs for its own mobile division. Even though they bumped up the price of the Galaxy S26 by up to 300,000 won, it just wasn't enough to offset those massive internal and external supplier price hikes. So, Section 3, betting big on foldables. How do they fix this? Well, Samsung obviously couldn't just sit back and watch their mobile margins vanish. They needed a high-margin premium response, and fast. So on August 6th, rolling out across 106 countries, they launched this insanely ambitious new foldable lineup. They split their flagship into two tiers. You've got the Galaxy Z Fold8, which focuses on dropping weight using new Flex titanium tech, down to just 201 grams. But then you have the Fold8 Ultra, and this is where they packed in the premium features to fight that margin squeeze. A massive 8-inch main display, an incredible 200-megapixel HDR camera, a huge 5,000 milliamp hour battery, and it's their slimmest foldable ever at just 4.1 millimeters unfolded. They also rolled out the new Gemini AI-powered Z Flip 8 and some new Galaxy watches to complete the whole premium ecosystem. And you know what? The strategy seems to be working immediately. Global pre-orders for the new Z series jumped by more than 30% compared to the last generation. Europe saw a 20% bump, but South Korea was the real standout, hitting a record 1.44 million pre-order units. That's the highest ever for a Galaxy series. And what's really crucial for Samsung's long-term brand health is who is buying them. These pre-orders were driven heavily by younger demographics, teens, people in their 20s and 30s, and a female customer base that literally more than doubled. All right, Section 4, the shareholder showdown. Because despite the pre-orders, Wall Street wasn't entirely thrilled. You'd think $62 billion in profit would make investors happy, right? Nope. Samsung shares actually lost over a third of their value between June and August. Investors were deleveraging and getting super skeptical about how long this AI infrastructure spending boom could actually last. This triggered a massive showdown. An activist retail shareholder group called ACT launched a campaign, and they had this perfect quote. Retail shareholders are like a company's fan club. They praise it when it performs well and take out the stick when it does not. And oh boy, they brought a massive stick. They demanded a 45.5 trillion won, or roughly $32 billion share buyback program, plus strict limits on executive performance bonuses. Management basically had no choice but to listen. Why? Because everyone knows Samsung is sitting on an absolute mountain of cash. By late June, their net cash reached 167.59 trillion won. That's basically double what they had just a year earlier. So as a result, Samsung CFO confirmed they're actively discussing a new shareholder return program, which might include their first special dividend in 6 years. KB Securities is even estimating returns could hit anywhere from 100 to 200 trillion won annually. Finally, Section 5, forecasting the AI future. Let's see where Samsung goes from here. Just think about how hectic and transformative one single week in August 2026 was for them. On the 3rd, Goldman Sachs hikes their target price, betting server memory stays tight through 2027 and 2028. The very next day, ACT launches that huge buyback campaign. 2 days after that, the new Z series launches globally to fight the margin squeeze. And then boom, special dividend talks hit the news. This is a company operating at maximum velocity on every single front. And their long-term bets are just staggering. They just spun up a brand new robotics division reporting directly to the CEO. They're pouring $73 billion into AI chips for 2026 alone. Plus, they're teaming up with SK Hynix on a $518 billion national project to build 2 new mega chip fabs in South Korea. On top of all that, they've successfully locked down long-term contracts with their 5 biggest global data center clients, guaranteeing massive profit visibility for years to come. Which brings us to our final thought. We've looked at the extremes today, right? A chip division printing literal record profits, while the mobile division gets crushed by that exact same AI wave. But looking at these massive investments, it's so clear that Samsung has positioned itself at the absolute undeniable center of the agentic AI revolution. So as we watch this tech giant navigate this crazy disruption, the real question isn't if Samsung will survive the transition, it's just how big can it become? Thank you so much for joining me for this explainer today. Keep analyzing, keep learning, and I'll see you next time.